Let's connect with Chandresh Nigam. He is Chief Executive Officer with Axis AMC. Chandresh, fantastic to have you back on ET Now, and thank you for joining us. Chandresh, clearly there are no triggers for Indian markets in the short term, but the importance of state election is huge. So in the overall scheme of things, what is the importance of the assembly election, because that is more like a semi-final to the big event?
I think part of it it's difficult to say, but I think part of it may already be there. I think the groundswell of what probably the markets wants to see is already there. So I don't think people are going to really wait for the outcome of the elections. Yeah, in fact, if the election results are different from what people are expecting, then you actually may see some kind of a weakening in the markets. But I think large part of what people are expecting from the elections is probably already discounted in the markets.
You talked about strong foreign flows, but mutual funds, Chandresh, continue to face withdrawals. October saw outflows of about almost 4,500 crore rupees. But when do you expect participation to actually pick up?
So I think you have to look at the mutual fund flows from two sides. I mean, what we call as new sales and then also redemptions. So redemptions, as you know, has been rising. People who have been invested over the last 3, 4, 5 years or maybe even longer are seeing these as opportunities as the market comes back to its all-time high, seeing this as opportunity to get out. But we are also seeing some small, it's not large, but some small movement for people saying, okay, now I can take a next 2 to 3 year call. Things will settle down after the elections and the economy will bottom out. So we're seeing some gross flows. Unfortunately, the redemptions are still much larger than the gross flows, and that's why we see net selling, which institutions and mutual funds especially are still have to undertake. But as I said, I think there is a little bit of a turn in the gross inflows, the new flows which are coming into the industry.
Chandresh, in your portfolio, you largely have 3 large exposures. Number 1, banks, number 2, IT, and then consumer. Would you bet on these sectors or these groups to outperform in the near term?
Yeah, I think one of the grounding philosophies for us has always been businesses rather than sectors. So we are quite focused on any business which is going to, in our view, perform well or grow reasonably well over the next 3 to 5 years. It so happens that we do believe that financials, consumers, IT, these are really long-term sustainable stories. However, our portfolios have always been very balanced. I think we've been able to find opportunities across all sectors virtually. So yes, we have been a little away from some of the deep cyclical businesses linked to infrastructure, capital goods, etc. But we've had some exposure to them, and over the last 3 months or so, looking at the economy bottoming out, interest rates over the next 12 months looking to head down, we've been adding on the margin some of the stocks in these sectors as well.
So deep cyclicals, Chandresh, are a complete no, but what about rate sensitives, metal stocks, especially blue chips, which have been doing well?
So in terms of metals, our view has been that global commodities and global economic growth is still likely to remain a little tepid. So only in cases where we have very strong reason to believe that over the next 12 to 15 months there will be significant improvement in operations, those are the kind of commodity businesses generally we would like to own. We're not looking at a very large upswing in commodity prices globally in general. So yes, import, because of higher rupees, some of these companies have been beneficiaries. So we have some exposure, but we're not betting large on that sector. I think coming again from a bottom-up perspective, strong businesses, good pricing power, and I think those kinds of opportunities are available across sectors. It's not just things like consumer, etc. I think it's there in automobiles, it's there in media. I mean, virtually every sector you would find those opportunities, and we are very happy to play any of those.
Chandresh, coming to the banking sector, do you expect pressure on bank margins as the Reserve Bank of India continues to hike rates? Would you stick to private banks despite PSU banks which offer a lot of valuation cushion?
Yeah, so you've got 2 questions in there. One is the exposure to banking, and I think as a growing economy, I think one of the big beneficiaries for that, and not for the short run, next 5-10 years certainly will be the banking sector. We believe that's kind of a core position for us in virtually all our portfolios. So I think the exposure to banking will remain, and it's a large sector of the economy, and there are a large number of companies, a large number of banks, a large number of non-banking financial companies which have got sustainable and business models which generate reasonably high returns on capital. So these will remain to be our core focus. At the margin, while we do have some focus, some exposure to public sector banks, I think the valuations does make them look attractive. However, we do have some concerns over the long-run return numbers for some of these banks, and hence we would kind of wait and watch and see if there is a better time at which we can enter these some of these public sector banks.
To refer to export-oriented sectors, IT saw maximum upgrades in this earnings season. Is there still room for appreciation?
Yeah, I think the global environment is reasonably supportive. While I said growth is not that strong, but it's at a reasonable pace. And one of the things in IT is the fact that even if you look at most of the large businesses, whether in the US or in Europe, they haven't really invested. They've largely been in a maintenance mode, except for some really new technologies which they had to go after. So they have been in a maintenance mode, and I think the cues we are getting is that they are now getting back into investment mode. So 4 or 5 years they haven't done that. So that should be very positive for the IT businesses.
Chandresh, in your portfolio, you also have some small and mid-cap stocks in niche areas, like Page Industries, Symphony, Treehouse Education. Would you adopt similar themes or criteria to pick up multi-baggers in the small cap space?
See, I think, we believe from a bottom-up perspective, medium to long term, great amount of wealth can be generated by buying businesses or buying stocks of businesses which are going to grow profitably. And what I mean by profitably means is reasonably high return on capital, they have some pricing power, and they have cash flow generation. I mean, our motto has always been the business of business is to generate cash. I think if you can stick to those kinds of names largely, I think over a 4 or 5 year period, irrespective of where the market goes, you will end up making money. So we believe there are lots of such opportunities in the small cap space, and that's what this fund is going to try and exploit.